Welcome to Trading the Close. My name is Gareth Soloway, Chief Market Strategist here at VerifiedInvesting.com. Lots to cover, obviously, today, guys. I love doing these market wraps with you. We go over charts, we go over price action, and we go over what you need to know for the next day or so. So let's get right into it without wasting any time, taking a look at what the markets are doing. The biggest thing that jumps out to me right here is the fact that yesterday when I did Trading the Close with you, the Dow was having a great day, up something like 300 points, and the NASDAQ was down over 100 points. Well, guess what? Today, the Dow is down 348 points, and the NASDAQ is up 225 points. So do you guys see what's happening here? Basically, this is a rotation of capital. It's almost like the water comes in, and then the water goes back. Wax on, wax off, right? So that's what we're seeing here is a rotation of capital. Today, Nvidia is bouncing. The tech sector is hot again. The semiconductors are rallying. And therefore, the Dow stocks, which are kind of like the old trusty names, they're coming back in. Money is going out of them into the tech stocks. All right, so that's what we have right there in terms of the short-term Dow and NASDAQ. S&P is catching a small bit. S&P yesterday was right in the middle, right? Of things. It was down a little bit. It wasn't down as much as the NASDAQ. Today it is up a little bit, just not up as much as the NASDAQ. Okay. Oil today down just slightly here. We have a little drop of about 90 cents. Gold is also pulling back. Silver's an interesting chart, short-term breakdown on silver, although I do have my buy levels ready to rock and roll on silver there. And then Bitcoin is bouncing back here. Pretty nice bounce. In fact, yesterday getting as low as 58,000 and now back to 62,000 if you're in my Smart Money crypto service. Beautiful. We picked up yesterday Avalanche at the lows just above $23.50. That's north of $25.50 today as we continue to crush it in that service. Smart Money Crypto is the name. Check it out if you haven't before, if you're a crypto investor. Here's your heat map. Remember, and again, I love this stuff, guys, because this is just the coolest stuff ever, right? So yesterday, remember, Nvidia was red, and like we had red over here, Meta, Microsoft, etc. And then the rest of these were green, right? It was pretty green over here. Well, today, it's the opposite. And this is just that flip-flop, that money flow. So money's going out and then coming back in. And so you can see it very clearly on the heat map. Don't forget to check out the homepage of Verified Investing. We have heat maps. We have all the stuff, fear and greed indicators, everything, verifiedinvesting.com. All right, follow me over here. Let's get into the intraday action here on the S&P 500. So the S&P 500 has generally been pretty muted today. Volume is light. We did see just before that the S&P is generally higher. So again, we had a little chop early. Today we opened slightly positive, went up. We had this one little sell-off kind of around the midday time frame, and then you got a bunch of tails. This is a great teaching opportunity for me. So if we look at these tails, right, if we zoom in, this is what we call a three-tail theory. This is in my Winning Trader series, folks. It's a powerful indicator. And basically what is going on here is that you have sellers trying to push down the market, the S&P here, and buyers are saying, nope, we're going to win. Then the sellers try again, and the buyers push back, and they win again. Sellers try for a third time, and we see another epic buyers coming in. And what happens here is that after three times, you get a scenario where the sellers just say, hey, listen, we've tried three times. We can't push this market down anymore. And what ends up happening? You get your upside move like that. This is a great example of the three-tail theory. For those of you that have taken the Winning Trader series, note that right there. For those of you that haven't taken the Winning Trader series, don't forget, there's going to be a 60% off sale in late July, and you guys can pick it up then for pennies on the dollar. Literally, I think it's $10,000 right now. It'll be about $4,000 at that sale price. That still sounds like a lot, but when you think about everything up in this brain for 25 years is in that course, it honestly is amazing and it changes lives. Okay, so there we have it right there. Markets again holding steady. If we look at the 10-year yield today, almost no price movement. That's likely staying the way it is until we get into the PCE data on Friday morning. Notice the pattern though, right? Recognition. Pattern recognition is number one for good investors and traders. What type of pattern are we forming? What type of pattern is this, guys? Look at it. upside down flag, right, which is a bear flag. So right now, based on this price action, you would anticipate that later this week, the probabilities would favor a move to the downside in price on the 10-year. So the 10-year would come back in here. All right. Now, we did see the last couple days that the dollar yen, which has been a big concern of mine, that stabilized, pulled back ever so slightly, but not enough to get out of the woods yet. If we bring up the USD JPY, we can see that basically we've had two sideways days. Just the mere fact that you're not pulling back harder tells me this is honestly going higher, which raises the red flags again that this could be problematic for the market. And again, for those of you that don't understand what's going on here, is basically Japan's currency is weakening very quickly, and it's getting to a point where it's concerning the Japanese government, the Japanese central bank. And so what they did was they had to intervene here, which is why you saw this drop, and now it's going right back up again, which means the yen is weakening against the dollar. So essentially the U.S. came out and said, hey, we're going to label them a potential currency manipulator. Japan doesn't like that, obviously. It's basically meant as a warning sign. They're saying don't intervene in the currency markets. But I'm telling you right now, if this keeps going higher, Japan's going to have to intervene. They intervene by dumping U.S. dollars, U.S. debt on the open market. The U.S. is like, don't do that, don't do that. We don't want more people. Like China's already been dumping lots of U.S. debt on the open market. We don't want any more countries having to do that because you can actually create a crisis here by doing it, which is why the U.S. cares. Like if you think about it, most people would say, well, what do you care what the Japanese do to their currencies if they have to intervene or not? Well, this is why. It's all interconnected and can cause issues over here. All right. That's a good little breakdown of that. Let's take a look at Nvidia today. Nvidia is trading up on the day. You should not be surprised at the bounce today on Nvidia, folks. If you understand methodology that I teach, Winning Trader Series, 3-bar surge, 1, 2, 3. And then essentially you get that move down. The buyers that were waiting on the sidelines saying, oh man, I wish we could just get a pullback. They got their pullback. Now you're getting your bounce. What you want to do is you want to say, well, where could this bounce go? Gap fill right here. We basically kissed it right into this level here on the chart. So gap fill is a key resistance point right there. We kissed it right there. And this is also, if you take this high to this low, this is a 382 fib right here. So that makes a lot of sense why that could be a little bit of a resistance level. Now, if it goes higher tomorrow, which it could, and in fact, wouldn't surprise me if the buyers are still looking to bid it up tomorrow morning, at least pre-market, you then have another point right in here. See this area right here? That will be another resistance point. That would be where it starts to look good for me as a short trade for a potential day trade on an intraday basis. Obviously, I'll be trading with the Apex Live day trading room. If that looks good, we'll take that trade. All right. Aside from that, folks, if we just go to the charts here, the QQQ ultimately had a little bit of a bounce day. I still think the Qs are going to fall more, folks. You can see, again, we still have a big gap right here. I think we got to come down into that range. The other thing I mentioned today as well is that you're now entering, like as we get later in this week, we're entering the blackout period for a lot of these stocks. In fact, over 50% of the S&P 500 will be in blackout. Blackout means that they're not allowed to buy their own stock with these buybacks. And we saw literally the last time, and if we flip over to the S&P 500, I showed this morning, but it's actually very, very powerful. The last time we entered this period where these companies were not allowed to buy billions, hundreds of billions of their own stock was right here, and that was the result, right down. So now we're entering that new phase right here, and my guess is we have this upsloping trend line on the S&P, and it's likely headed down to that range. All right, quick check in here on Bitcoin. Let's take a look at Bitcoin. Bitcoin getting a good bounce. You have a bunch of trend lines here, but ultimately we did bounce off of this first level here. We pierced it yesterday. We did recover. We're getting a bounce. I look at this as being a minor support. I expect ultimately maybe we trade, I mean, who knows? Maybe we even go that high. Kind of doubt it, but either way, eventually we should roll over and head back down. 56,500 to 57,000 is your next technical level. But good bounce, and again, great for us in Smart Money Crypto at verifiedinvesting.com, as again, that is giving us a nice bounce on these altcoins. Great bounce on the altcoins. We have Cardano in our portfolio, INJ, which is injective. We got Solana. Solana's in the money for us. Awesome stuff, so congrats to those members out there. All right, next up, let's take a look at gold real quick. Gold is beginning to break down. I highlighted this chart earlier today. You can see it looks a little mucky because I have the head and shoulders there. I'm going to remove that because, again, that's a bigger pattern and it hasn't triggered yet. But basically what we have here, if we zoom in, is we have a bearish consolidation. Here's your wide range bar. Here's your inside chop inside of this channel. And look, we're starting to break down. So my guess is you're headed a little bit lower, down to about this 2280 level on gold. And again, that would be my next expectation. If we flush out and look at silver as well, and we'll take a look at oil just next, silver has now broken this key upsloping trend line, which again is what I anticipated it would do. And we talked about this in the game plan, and I've talked about it to my Smart Money Commodities members out there. Major pivot point here, here, and here, and there's your breakdown, and then we should go right into this level here. See the channel? So the channel has literally worked. Look at that. Look at that. Just goes up and down, and so price should fall right there, and it should find some support around 28, 27.90, somewhere in that vicinity. That's actually where we should get a good solid bounce on silver. All right, lastly, we'll go quickly over oil here. Oil, again, last I checked, wasn't a very big mover. We did see a little bit of a drop. You can see I annotated this chart out before. This was actually looking at a bigger picture. So again, we can erase those for the time being. This is actually where I expected to go by year end, which is down to the $64 level. But if we just look at the chart here, it's had a big bounce. There's three major trend lines that are all up in this range that are coming in, inclusive of this one. So if we look at this, we have kind of a big area right there. There's a big area upsloping right here as well. These lines, notice they're all coexisting right in this 82 to 83 level. Got a little bit of pullback, but don't be surprised if we have one more move up to 82 to 83. But ultimately, folks, minimal upside. I think, again, the next wave of selling is going to start in oil here. I mentioned this before, but there were a lot of hedge funds that were short oil, and that's one of the reasons why, even with China still struggling and the U.S. economy starting to slow, oil has gone up. It's amazing how the macro data matters, but also the hedge fund allocation matters. And that's something that a lot of people don't understand. But when you have all the hedge funds on one side of the market, as price comes down, a lot of them start to cover their shorts, which is buying. And then even as price goes up here, which is what it's done, a lot of those start to cover because they get scared, and they cover, which pushes it up even more. Once you get more of an even balance long and short with the hedge funds and with big money, then price acts more normally and will go back to the macro data to get its cues about which way it should go. And that's where the technicals come in with this zone right up here. All right, guys, as always, you know I love doing these trading the closes with you, giving a summary. I do think that there are, so tomorrow after the bell, we do have earnings from Micron. Let me just check FedEx. I think FedEx was reporting after hours here. Oh, yeah. Look at FedEx getting a nice little bid here. So good little pop on FedEx in the after hours. We'll be trading this tomorrow in the Apex Live Day Trading Room. I'll go over my levels with you guys in the game plan tomorrow as well. But that is one heck of a move on FedEx from about 255 close all the way to 281 now. Holy cow. What a vertical move on FedEx. All right. Have a great rest of your day. I'm going to go see if I want to trade this here in the after hours. Have a great rest of your day. Talk to you soon. Take care.